Look, if you've been following the crypto space lately, you know it can sometimes feel like a totally chaotic battleground, right? Just a bunch of different networks all trying to do the exact same thing. But actually, scratch that. When we really look closely at the architecture taking shape, that's not the case at all. Welcome to this explainer where we're going to dive into how this landscape has actually evolved into a highly specialized complementary ecosystem. We are literally watching the build out of a new internet of money, a multi-layered financial infrastructure that is completely modernizing how value moves around the globe. So here's our roadmap for today's explainer. We'll start with the Internet of Money, then move to smart contracts as automated agreements, followed by our three main networks, Ethereum as the digital oil, Solana as the digital gas, and XRP as the digital teleporter. Finally, we'll wrap up with the 3-second future. Let's get right into it.
All right, Section 1, the Internet of Money. Okay, so we have moved way beyond the original era of Bitcoin. Bitcoin gave us decentralized gold, sure. But this new era, it's giving us entirely decentralized, programmable economies. And that brings up a massive fundamental question. How do you actually enforce a global financial agreement without some incredibly expensive middleman? You see, this highlights the absolute core problem with legacy finance. Right now, if you want to send money, buy an asset, or settle a trade, you are relying on a massive web of intermediaries. Banks, clearinghouses, brokers, they all take a cut, and honestly, they all just add a ton of time. It's a system built on manual databases that, for some reason, still only operating during standard business hours. It's slow, and it creates a huge amount of counterparty risk, meaning you just have to cross your fingers and trust that the middleman will actually do their job.
That takes us to Section 2, smart contracts, automated agreements. So the solution to this whole middleman problem happens to be the foundational building block of the entire Web3 industry. How do we automate trust? Well, we can skip all the heavy coding jargon and just think of a smart contract as an automated digital agreement. It isn't a legal document you sign with a pen, it's pure code. It lives on a decentralized network where absolutely no single person can tamper with it, bribe it, or shut it down. Once it's deployed, it runs deterministically. And all that means is it does exactly what it is programmed to do. Every single time, absolutely no exceptions. Think of it using simple if-then vending machine logic. Just like putting $1 into a vending machine and pressing a button literally guarantees your snack will drop. These tamper-proof programs guarantee that once conditions are met, the transaction executes automatically. So, if the goods arrive on time, then the payment is instantly routed to the supplier. No waiting for some wire transfer to clear in 3 business days, no manual data entry, and absolutely no middleman taking a toll. It is trust built right directly into the technology itself.
Moving right along to Section 3, Ethereum, the digital oil.
Now that we understand the engine, let's look at our first pillar. Ethereum functions as the foundational digital oil that settles this new economy. It is the absolute bedrock of the ecosystem right now. Get this, it currently houses a staggering 52% of all global DeFi total value locked. We're talking roughly $85 billion. This isn't just some experimental playground for tech nerds anymore. This is where the world's most serious digital capital lives. So when we call Ethereum the digital oil, we mean that its native asset, Ether, is the essential viscous fuel required to power this massive global network of smart contracts. You see, instead of competing on raw speed, Ethereum is acting as a highly secure blue-chip internet bond. It operates on a layered architecture, acting as the ultimate settlement layer. Think of it as the supreme court of transactions, where security and decentralization are prioritized above literally everything else. And this approach, it's won immense institutional trust. We've seen over $11 billion flow into spot Ethereum ETFs. But because it's so secure and heavy, the daily heavy lifting, executing thousands of those fast microtransactions, is increasingly being pushed to secondary networks called Layer 2 rollups. They compress the data and then just send the final receipts back down to Ethereum to be permanently settled. Which perfectly transitions us to Section 4, Solana, the digital gas. Right, so if Ethereum is that viscous, secure oil, we obviously need some high-octane fuel for consumer-scale applications. And that brings us to Solana. Unlike traditional chains that process one single thing at a time, Solana uses a monolithic design to execute thousands of non-conflicting smart contracts concurrently. Imagine a grocery store. Legacy blockchains are basically a store with only one checkout lane open. No matter how fast that one cashier is, a line is definitely going to form. Solana, using a tech called its C-level runtime, essentially opens thousands of checkout lanes all at once. As long as the transactions aren't trying to touch the exact same data at the exact same time, they are processed in parallel. It's a massive architectural shift that allows Solana to scale right at the base layer, without relying on external networks. By maintaining a lightning-fast block confirmation time of roughly 400 milliseconds, and with the new Alpenglow upgrade pushing that down to an insane 150 milliseconds, Solana acts as a real-time transaction engine. I mean, this speed is completely comparable to centralized Web 2 online processing systems. It's what makes things like on-chain gaming, real-time trading order books, and everyday consumer payment apps practically seamless. When you click a button on a Solana app, the transaction is finalized almost before you can even blink.
So how does it do this? Well, there's this really fascinating mechanism called proof of history, which actually embeds the passage of time directly into the ledger itself. In traditional networks, computers have to constantly message each other back and forth just to agree on what time an event happened. It's laggy. Solana completely solves this by introducing a cryptographic clock. It proves the sequence of events before the nodes even start voting. It's just an incredibly elegant solution that slashes network overhead and allows Solana to maintain an average of 1,000 to 4,000 transactions per second with fees that are literally fractions of a single cent. It is absolutely the perfect digital gas for high-frequency execution. Next is Section 5, XRP, the digital teleporter. Finally, let's explore how we can instantly move value across borders using XRP as our digital teleporter. Traditional correspondent banking relies on a chaotic web of pre-funded accounts spread all across the globe. If a bank in Japan wants to send money to the Philippines using the legacy SWIFT network, they can't just hit send and beam the money over. No way. They actually have to hold millions of Philippine pesos in a partner bank account just in case a customer wants to make a transfer. This requires tying up an estimated $27 trillion globally. Just pause and think about that number for a second. $27 trillion. That capital isn't out there earning returns or funding new loans. It's literally just parked there, doing absolutely nothing, all just to facilitate a slow, multi-day payment process. But using what's called on-demand liquidity, a bank can just convert local currency into XRP, instantly beam it across the globe for fractions of a cent, and then immediately convert it back to fiat on the other side. This completely frees up all that trapped capital. And this is exactly why XRP is our digital teleporter. It serves as this highly liquid bridge asset. The XRP ledger doesn't even use energy-intensive mining. Its consensus protocol validates transactions every 3 to 5 seconds. So a US business paying a Thai supplier can convert dollars to XRP, teleport it across the ledger, and have it arrive as Thai baht almost instantly. The bank doesn't need those foreign currency accounts anymore, vastly reducing their costs and literally revolutionizing international remittance. Which brings us to our final part, Section 6, the 3-second future. As we pull all these distinct pieces together, I hope it becomes super clear that these networks aren't just chaotic competitors. They are actually forming a unified, complementary infrastructure. Looking at this ecosystem side by side, the beauty of it is pretty undeniable. We have the secure oil for settlement, the high-octane gas for consumer speed, and the teleporter for instantaneous global liquidity. Ethereum provides the battle-tested, secure foundation where institutions can safely deploy billions in tokenized assets. Solana takes on the heavy load of consumer interactions, parallel processing trades and games at lightning speeds. And XRP, it provides the frictionless pipes that connect different global economies together, totally bypassing that clunky, expensive correspondent banking system. By replacing legacy bottlenecks with these highly specialized blockchain protocols, sending value globally now takes the exact same amount of time as sending an email. Seriously, think about how much the internet changed communication. Before emails, sending a document overseas took days, and it cost a lot of money. Now, 3 seconds, and it costs practically nothing. We are currently witnessing that exact same paradigm shift, but this time it's for money itself. So I'm going to leave you to ponder this. As these complementary networks completely eliminate financial friction, how will instantaneous, programmable money transform your daily financial life? When moving capital becomes just as easy, instant, and cheap as sharing a photo online, it's going to unlock business models and financial opportunities that we honestly can't even fully imagine yet. Keep a close eye on how Ethereum, Solana, and XRP continue to build out this amazing infrastructure. Thanks for diving into this explainer with me, and I'll catch you on the next one.